Good morning. This is Larry McMillan with a stock market update on Monday, October 18th, before the market opens. So last week, the bears seemed to be having their way until about Wednesday, and then the market reversed quickly and strongly to the upside, gaining about 150 points in the last 2.5 days of trading. As a result, it broke the downtrend line that had been in place since early September. So on the surface, this is all bullish, and we should be now looking for S&P to attack the all-time highs at 45.45. There are a couple of cautionary, subtitles here, though. One is that breadth was poor on Friday, and we know breadth hasn't been all that great all along. So this may not be all that unusual, but New York Stock Exchange breadth was negative, and stocks only data was flat. So that's not exactly encouraging. Also, there are a couple of gaps still left on the chart on the downside. And this rally, it seems better than an oversold rally, but it might just turn out to be just nothing more than another oversold rally that fails. So how would we know? Well, clearly, if we break out to new highs, we know that the rally was for real. But on the other hand, if we fall back below 43.75, there's a gap on the chart there. If we close below that, then I would say that negates any positives that could have come out from this last week's rally. Also, the breadth oscillators could roll over to sell signals. That would definitely be a negative as well. So we're keeping our eye on those things. The put-call ratio, sell signals, equity-only put-call ratio, sell signals are still in place. And while, that's somewhat unusual, they are moving sideways. So if they start to trend downwards, that would change things. But right now, they haven't done that. As I mentioned, breadth is struggling, but technically the breadth oscillators are still on buy signals, weekly on buy signals, and they've managed to avoid falling back into a sell signal. However, that's not that far away. For example, today, if there are 600 more declines than advances on the NYSE, that would generate a breadth sell signal, and in my opinion, would cancel out the benefits of that late week rally from last week. The new highs versus new lows strongly in favor of new highs at this time. That's even across all the data sets, including NASDAQ. The VIX spike peak buy signal, that's still in effect, and now the VIX 20-day moving average is starting to decline again. And if it crosses back below the 200-day, then that would be another positive for stocks. So, VIX is in a positive place right now as far as the stock market is concerned. Also, the construct of VIX derivatives, mostly meaning the term structure of the VIX futures, slopes upwards, and that's bullish for stocks too. So, in summary, the bulls have definitely attempted to gain control. We'll see if they can continue to hold here. Breadth is going to be the key, though. Breadth needs to expand. If it weakens further from here, and the market is opening lower this morning, it looks like, then breadth sell signals will come into place, and that pretty much throws the whole mix at least back into a trading range, if not into a bearish trend. This is still October. There's still a seasonal negative to the month, at least at this time of the month. So that might have some factor in here as well. So we have moved away from our core bearish position stance, but we are trading, of course, signals as they occur on either side of the market. I invite you to visit our website and take a look at our newsletters where we keep up to date on these things daily. Thank you, and have a great week trading.